Hey everybody, it's me, Greg Menarino. How are you today? It is Tuesday, October 3rd, 2017. A lot of things are going on right now with regard to this market, and I want to put a perspective on that. Let's start off with this. As I am doing this video blog, this melt up with regard to the stock market is still pretty much in full force. What I want to talk about here is what's driving this and where the opportunities are, quite frankly, and what this is setting up moving forward, because it's incredible however you want to look at it. What we do understand, and it's pretty simple, if you follow this blog, I am sure you have a clear understanding of what I'm about to say. This market is not being driven by earnings or any kind of rational thing. It's completely out of touch with reality. There is some type of exuberance going on right now, which is hard to get your head around unless you put a perspective on this. And that's really what I want to focus on here. So we understand that this month, the Federal Reserve is supposed to start normalizing their abnormal balance sheet. The market does not believe the Federal Reserve is going to do anything. I am also of that mindset. If you recall, if you follow this blog, the day that the Federal Reserve came out months ago stating, hey, you know what, we're going to start normalizing our balance sheet because it's so abnormal, I said it wasn't going to happen, and I still stick to that. The Federal Reserve has no choice here but to keep stimulating this market and buying more debt, creating more debt and buying it. So that's what's driving this market. Now you're going to hear a lot of people on the mainstream financial channels trying to fist feed you that this market is being driven by earnings. I mean, these people are brain dead, quite frankly. They don't want to tell you that valuations are at levels that we haven't seen since the last bubble and the bubble before that. They don't want to tell you that. Now, it is true that markets can remain in this kind of a state for quite a long time, and that's what's going to happen here too. I know, believe me, a lot of you have written to me this morning when I opened up my email box to say, hey Greg, have you seen the fear and greed index? It's almost 100%. It's true, it's about 90. Doesn't mean anything to me, I'll be honest with you, and that's because the market is irrational. Does it mean that the market's going to pull back tomorrow? Well, it very well might, but this environment of risk that we're seeing here is a deliberate reaction to what the Federal Reserve is not going to do, and that is they're not going to touch their balance sheet in any meaningful way. Perhaps, and I've been saying this, the Federal Reserve might raise the federal funds rate 0.25% at the end of the year just to remain credible. The fact remains that our economy here in the United States is dead in the water. It's going nowhere. Money velocity still near a historic low. That is a main driver here. Without cash moving through our economy, people, we're not collecting tax revenue. And again, without that mechanism, think about it. It's just so simple. If cash is not moving through our economy, where are we going? We're going nowhere. But they won't tell you this either. So the fact remains is the stock market will remain completely disconnected from our economy and from reality as long as the Federal Reserve is doing what they're doing deliberately, because they have no choice, creating an environment of risk. Where are investors going to put their cash? They're not going to put it in precious metals in this environment. Because again, the Fed is creating this environment of risk. You can't be in a debt instrument. You can't be in a debt instrument. You know that. If you follow this blog, you want to hold a debt instrument, including a piece of fiat currency, you've got to be nuts. Okay? So you take advantage of this in multiple ways. Look, the number one way to take advantage of this is to understand that the debt bubble that we are in is going to get bigger. It's going to get bigger. There's no way out of it. It's the nature of the beast. It's the system that demands that debt be borrowed into existence in greater and greater amounts every single second of every single day. Take the opposite side of that trade, add to your physical holdings of gold and silver. I added substantially to mine over the past several weeks, and I will continue to do that. These prices are insane that we're seeing here. Now again, these are not trades. I cannot stress that enough. I keep getting emails from people about this. If you are holding, if you're new here, maybe that's who I'm hearing from. If you're new here, these are not trades. You cannot expect that gold and silver are going to make any monumental moves higher in this environment. It's not going to happen. They remain on sale, and you should be smiling like I am when you see this. These are longer term holdings, like I've been saying, like forever now. Bet against the debt, become your own central bank. The debt is going to get worse, much worse, before this whole thing corrects to a fair value. And this is opportunity for you, the market. Let's talk about trading or holding short-term investments in this market. You all know that's what I do. I have been riding the wave in this market higher. It's going to continue going that way. And I can promise you, well, I'm going to tell you what I'm going to do. So you can, if you're a trader, I mean, you think about it as well. We know we have an environment of risk that's being fostered by runaway central banks, none more so than the Federal Reserve. They have no choice but to continue doing what they're doing. The debt's going to get worse. Yields are going to stay about where they are until they don't. Watch that bond market, like I always say. A lot of people ask me, Greg, how do you watch the bond market? It's a great question. Let me just cover that real quick here. Just follow the 10-year yield. Go to like Market Watch, for example. And you're going to see in the upper left-hand corner market indices, currencies and stuff like that. Just click on each one of those until you come to bonds, and you can watch the 10-year yield. When the 10-year yield is rising, like we're seeing now, that means cash is leaving the bond market. It's simply going to look for somewhere to go, and we know where it's not going to go in this environment because the Federal Reserve has fostered an environment of malinvestment. It's not going to go into precious metals right now, which is great for us stackers. It is going to make its way into the stock market, which is going to march higher. Okay, like I've been saying for weeks and weeks and weeks and weeks. Actually, I've been saying since the election of Donald Trump that this was a game changer and the market was going to continue to vault higher. I don't know another guy out here who nailed that to the wall better than me, quite frankly. This environment is going to continue until it doesn't. When? I have no idea when it's going to stop. I don't care when it's going to stop. I'm just going to ride the wave either way. I'm going to continue to adding to my positions of precious metals and trade this market and rip its face off like you have no idea. That's what I'm going to do, because that's what the big banks are going to do, and I can stand toe-to-toe with any one of these people. There's no doubt about it. I'm very confident of that. That's what they're doing. So why can't we do it? We can play the same game. We can play the same game. We can play better. That's the truth. So that's what we are going to do here. There's opportunity everywhere, people. You just got to look for it. Don't just sit there like a deer in the headlights, like I said, I think in the video I did yesterday or the one before that, and do nothing. This is the golden age. From no matter how you want to look at it. You're a stacker, you are in the right spot, because the debt is going to get monumentally worse. Monumentally worse before it corrects to fair value. The stock market is going to continue to melt higher. Are we going to get little pullbacks here and there? I hope we do, because I can promise you I'm going to buy every single one of those pullbacks. Every single one, because the market is going to melt higher in this environment where the Fed is going to continue to stimulate and print and keep rates suppressed as far as the eye can see. They have no choice, because if they don't do that, we get an absolute meltdown of the system. The debt bubble will burst. All of these, we're in a multiple bubble environment, and every single one of these bubbles is dependent on another bubble. So we are going to face a moment of meltdown like like it's going to be biblical. I don't know another way to put that here. And we are going to unfortunately suffer a correction with regard to human population. The world central banks are public enemy number one, and I cannot stress that enough. They fostered this environment by... we've allowed this to happen. It's insane that we've allowed private institutions to basically run our lives by controlling the cash. It's unbelievable. And because of that, their product, world central banks, their product is debt. You know that is the only thing that they have, debt. They have to issue more and more debt in greater and greater amounts. Can't stop. Once we admit that we can't keep borrowing, the system implodes. The global debt has risen in tandem with human population. We're going to get a correction in both of these things, people. There's no doubt about it. It's going to come. When? Don't know. Don't care. Trying to capitalize on it now and prepare for what's coming. Look, in a worst case scenario, and this is how you always have to think of things, you can't sit there and say, well, you know, it's not going to be that bad. All right, well, you know what? You have that kind of a mentality, you're in a lot of trouble. Read Sun Tzu, The Art of War. I always talk about that book. You always have to have the high ground. You'll always have to be prepared for a worst case scenario. In a worst case scenario, people, well, you fill in the blanks, and I'd love to hear from you. All right, I know this video is getting kind of wordy here, but I wanted to put a perspective on this so you can understand what's going on. Why the stock... people keep writing to me, Greg, what's going on? Why does the stock market keep going higher? Well, I've pretty much outlined it for you. There's nowhere else for investors to go. So they're piling right now into the stock market. This is going to change at one point when, again, have no clue whatsoever. But I can promise you that I'm going to keep my eyes open. I watch the bond market. I try to sit here and put these into a perspective for all of you so you can understand what's going on and how to make it work. Do not lay down here, people. Don't lay down and be fleeced. There's no reason for that when you can use all of this to your advantage. While we can, let's take advantage of this. It makes no sense why we wouldn't do this. Bet against the debt, become your own central bank. My theme since day one, and I stick by that, and I'll never change. I understand what's going to happen here with the debt. It's going to continue to inflate until it doesn't on a global scale. Certain assets like gold and silver are going to remain unbelievably suppressed for a while, and that is opportunity, people, for you and for me and for everyone with a few functioning brain cells to understand that this situation is only going to get worse before it gets better. And the stock market, it's going to inflate higher again until it doesn't. And then we're going to short this whole thing, and we're going to reap rewards like you cannot believe as this market tumbles. Anyway, that's it. Kind of long-winded, and if you thought this was interesting or informative, let me know. Write me a little, I don't know, a little feedback here. Share this video, get it out there, and I will see you tomorrow. Over and out.